Before investing in Amazon, it is important to understand a few things about the company and its shares. On Amazon's history, the company was founded in 1994 in the Seattle metropolitan area and started out as an online marketplace for books. The journey from bookstore to e-commerce powerhouse began with Amazon later expanded its product offerings to include music and videos, video games, electronics, toys, and more. The year 2006 was an important one for the Seattle-based company. Back then, Amazon turned its Amazon Web Services venture into a cloud infrastructure platform, the seed of what has become Amazon's fast-growing and high-margin cloud business today. Amazon also expanded its e-commerce reach to third-party vendors by introducing Fulfillment by Amazon. On Amazon's revenues and op profits, Amazon is probably known first and foremost for being an online retailer. But the company's business model is much more complex than this. For example, cloud infrastructure accounts for only 12% of sales, but nearly 60% of operating income, due primarily to the segment's much higher margins. In regards to revenues other than AWS, the lion's share of sales comes from online stores at nearly 60% revenue share. However, third-party sellers stand out as a faster-growing subsegment, with revenues having jumped 50% year over year in 2020. On Amazon stock's performance, a $1,000 investment in Amazon in 1997 would have turned into about $1.6 million 24 years later, for an annualized return of 37%. This annualized return has been better than the S&P 500 and Apple by 29 and 4 percentage points respectively. Annualized volatility of 60% means that Amazon stock has been about 4 times as jittery as the S&P 500 since the IPO. However, shares became significantly less volatile in the decade prior to the COVID-19 crisis as the company matured. Lastly, maximum peak-to-trough decline of 93% happened during the destructive dot-com bubble burst. After bottoming in 2001, Amazon stock reclaimed all-time highs in 2007.